Good afternoon, TGI Friday. Oh my God, welcome to October. But first and foremost, welcome everyone to Ann Marie's Tea with Ann Marie, with yours truly. Welcome to another Friday. Again, TGIF to everyone out there. Not my usual background. I'm actually here at my alma mater, Pahokee High School, where they're having Club Rush today. And we're going to talk a little bit about that in my show. But today I also want to just welcome my guest and wow, a longtime friend, Bill Curtis. Welcome, Bill. Welcome, Bill. How are you today? Thank you so much for joining me.
You're welcome. Yes, we're probably 6 years from when we met over at the Urban League, and then I came up to your place in West Palm Beach there, right off 95. So
yes. How have you been? I mean, I feel like I haven't seen anyone since this whole pandemic in person, of course. So how have you been?
I've been fine. I'm tired of going to funerals, though. You know, and a lot of it is, you know, people have had other issues. And, you know, you can't really go anywhere. So that's been kind of, you got to kind of learn to, which I've been pretty good at over the years, to be by yourself, live, you know, and have a good time by yourself. That's always, if you can do that, you're good to go.
Well, I think the pandemic has definitely taught us how to have a good time by ourselves. Hold on one quick second. I'm so
sure.
So I apologize to my viewers and I apologize to you, Bill. Like I said, I'm here at Pahokee High School today, and they have Club Rush. And so for those who know me, I'm the president of Girls to Women. And of course, I got to give a shout out to Girls to Women. We started here at Pahokee High School when I was a senior here at Pahokee High. And I, you know, have come full circle. I won't say how many years later, because I'm still 29. I've come full circle to where now being a president and we're able to just, you know, come back and give back to the girls. So we're recruiting for our girls for this school year. And so we're here at the different lunch hours, setting up, you know, a table and, you know, giving out information about our upcoming school programs. And, you know, we provide an array of different programs for our girls where we teach them everything from etiquette to financial literacy, you know, self-esteem, career development, and so much more. So that's what we're here promoting today. So I just had to kind of break away to come in and make sure that I spent some time with you this afternoon, Bill.
Thank you.
Thank you. So we were, you are the professional banking practitioner with Infinite Banking Practitioner, and you teach people about being their own bank. Am I correct?
Yes, that's correct.
So I want to kind of dive into that a little bit more because, you know, most of us are familiar with traditional banking practices when it comes to, you know, you open a bank account, checking your savings, you put it in a bank. You really don't earn much interest on a savings account, as we know. And we use it most of us just use it as a means to, you know, conduct transactions. So I'm really interested to hearing about your concept, your system, and how you're really helping people financially. But before you start into that, give us a little bit about your background and how you even came to this arena.
Well, I've always been in business, I guess, for the last 40 years. You know, I've always been like independent, whether I've been a salesman, you know, if I didn't sell, I didn't eat. And there have been over the years, you know yourself as being an entrepreneur or an independent person, you go hungry sometimes. But in order to move forward, you have to believe in your dream. I've been called a dreamer a lot, but I always tell people without a dream, what's the sense? So you have to believe in your dream and you have to be willing to do whatever it takes to get there. So I've been in business, so I pretty much relate to business owners, and business owners, it's all about cash flow. Um, I help individuals also. It's the same process. It's just a little bit more difficult for them, even though they're a business. A homeowner is just a smaller business. Some months they have a lot of money, and some months they're like a nonprofit. So the people that really want to learn about how to change their financial destiny and are willing to educate themselves, I can really coach them. You know, I'm not really, I can't really teach them, because what I do is really caught. It's not taught. And, over the years doing this on Zoom, I can tell when the light bulb goes off. If you remember being in high school as a kid, and you may be in math class and you're not getting it, and then boom, you get it.
Yeah.
I remember I went to Holy Cross High School in New York, in Flushing, and I had a problem in English between definitions, synonyms, and antonyms. And one day the light bulb went off, and I went from a 70 student to a 90 student, just by understanding. And sometimes that's the hardest thing. Will Rogers had a statement. Will Rogers was a writer, a comedian, a cowboy, and he passed away in 1935. But he had a statement which is true today. The problem in America is not what people don't know, it's what they think they know that just ain't so.
I like that slogan, because most of us think we know a lot, and I want to give a shout out to my good friend Tina T, who gave us a shout out, Bill.
I know her. Tina, I know her from the Jim Moran.
Yes, Tina's amazing. So that's a good point, because a lot of times we think we know, but we have no idea. And I want to get into the entrepreneurial side of things, because I think since the pandemic, sorry.
That's okay.
Being at a school. Since the pandemic, there are a lot of new entrepreneurs. We know that we've seen the great resignation, and people are wondering, where are people going? Well, a lot of those people are going into entrepreneurship. And so with your system, I definitely want to dive a little bit more into your system, because one of the biggest challenges for entrepreneurs is, of course, capital, whether it's startup capital or working capital. B is keeping that cash flow going. As we all know, like you mentioned, we've all had some challenges with cash flow. And then once you start getting employees, then you got payroll, and all these other financial circumstances that you're dealt as an entrepreneur. So how do you and your system, Infinite Banking, help businesses and entrepreneurs?
Well, most business people understand cash flow. I mean, that's the lifeblood of their business, and they can have the best quarter that their business has ever had, but they know that next month they have trouble meeting payroll. So they have issues. What do? Well, they don't go out of business. They've usually already planned for it. And the plan has been to get a line of credit at a bank. And I always tell them, well, you've just brought on a partner. He's not going to help you get clients. He's not going to be there at 6 a.m. when you have to receive merchandise or ship merchandise, or if you have a break-in. But at the end of every month, religiously, he's going to be there with his hand out to get paid, because he loaned you money. So if you know this has happened many times in the past, and it's going to happen again in the future, why don't you become your own bank? So the next time it happens, instead of borrowing from a third party and being submitted to their terms and their interest rates, you can become your own banker, borrow money from your own policy, and you can use that money to finance your business. You'll never receive a repayment statement. The interest, you charge whatever you want, and you make the payments whenever you want. If you can't make the payments, you don't make the payment. You need, for what I do, I ask people right up front, you need 3 Ds. I always tell people, you need 4 Ds to work with me. When I was in high school or school, if I came home with 4 Ds, my father would have killed me. But I tell people, in order to do this, and I don't really work with them if they don't, they need 4 Ds. They need the desire to either eliminate their debt or improve their life or improve their cash flow. They need the determination, because this isn't like a magic pill. There will be tough times. The only difference is they are now in control. So they need desire, they need determination, and they need discipline. If they have those 3, the 4th just comes naturally. They'll do it. But if they don't have those things, they're not going to move forward. You asked me in the beginning, like, what is infinite banking? So if I can bring up a couple of points. One, it will show you how to rapidly eliminate third-party debt, outside debt. It's going to teach you how you can finance everything you purchase. You can finance it yourself. I'm not talking about buying a loaf of bread at the store. I'm talking about cars, buildings, businesses. It also will grow tax deferred. You can use it tax-free without penalty at any time. It allows for passive income in a tax-free retirement. In a tax-free environment, we don't use retirement. We use passive income, because I always tell people, when I read the Bible, nowhere in it does it say Moses lived happily ever after. So, we use passive income, because most people, as you know, being an entrepreneur, if you are an entrepreneur, you're going to continue to work. You're just going to work on your own time. And lastly, it guarantees a tax-free transfer of wealth. So if you build a nice business and you pass away and you don't have something set up, a lot of, just like what happened with the Dolphins, they had to sell a lot of things when Joe Robbie died because they couldn't pay the taxes. But if they had a life insurance policy that they used for banking, not for death benefit, that death benefit they would receive tax-free, that could solve the tax problems in their other business. So, that's pretty much what infinite banking is all about. It's becoming your own financing and solving your own problems. And it allows you to, when some businesses are very seasonal. So what happens in the summer? Maybe down here, you don't have any money coming in, but you still have to make those loan payments if you have a line of credit. When you are the banker, hey, I don't have any money these 2 months. I'm not going to make the payment. Nobody's going to call you. I always tell people, unless you have your cell phone in one hand and a phone in the other hand, nobody's going to call you for the payment. You're in control. That's where the discipline comes in.
So that sounds really amazing. But there's still a lot of ambiguity around it, where it's like, okay, so I hear what you're saying, but is this becoming your own banker through a account is it a trust that I set up or something? Is it like you say, you mentioned life insurance? Is it one of those like key man insurances that businesses should have? What exactly is it?
Okay, well, the product is different from the process. I really don't sell the product, but what we use to do this, which I believe is the best product to use, is dividend paying, high cash value life insurance with a mutual life insurance company. The reason we use mutual life insurance companies, because if you get a policy, you become the owner of the company. So you will receive interest and dividends tax-free, as opposed to if you get a policy, which you can from a stock company, the stockholders, the shareholders, they share in the dividends. When you deal with a mutual insurance company, they work for you because the profits are to their policyholders. So that's the product we use, and people that get into this, there's a couple of things that they really need to have. They really need to be able to think long term, think down the road. Don't think tomorrow or next week, which is a hard thing for us to get over with a lot of people. Don't be afraid to capitalize, because the more money you put in, the more money you can use. It'll grow, and you're getting to use your money twice. What do I mean by that? When you use the money in your policy, you don't take it out. A lot of times people say, well, I'm borrowing my own money and I'm paying no, you're not. Especially real estate people get this when I talk to them. They want to use somebody else's money, OPM. When you borrow money, you're borrowing the money from the general fund of the life insurance company, and they're using your money as collateral. So your money is still earning interest and dividends. It's working for you once, and you're using it for something else. What I hear all the time with other life insurance agents and financial advisors, what's the internal rate of return? Life insurance, in my opinion, is not an investment. And people that sell it that way, I believe, are doing a disservice to the client. But this life insurance makes a great bank. It's a great place to park your cash. Your money has to reside somewhere. Where do you want it to reside? In somebody else's bank, where they're going to make most of the profits, or in your bank? So I always ask people, who controls the banking function in your life?
So, Bill, I want to pause you there for a second, because I want to just make sure that those who are watching and myself, that we're clear, because there are times so much confusion around insurance in itself, right? And there are a lot of different agents out there. Some work for really large companies, New York Life, Northwestern, so many others, Mass Mutual, and then there are those who are brokers. And then, so I've been approached by so many different ones over the years. And, it's like, okay, well, then there's the term life, there's whole life, and then you just said mutual. Is mutual the same as whole, or is that different? Is that a different?
We use it's a whole life policy.
Okay.
We get it from mutual life insurance companies.
Okay. So thanks for clarifying that.
I always tell people have a misconception of life insurance that they got from somebody else that has a misconception. It's one of the 5 human problems that we have. It's called the arrival syndrome. When I talk to people, and I already know that. They already know all there is to know, and you can't teach them anything. I can't work with those people, because I know something that they don't know that can help them. And if they're not, in business, if you're not willing to learn, you really can't work for them. Because what happens is, people talk about buy term and invest the rest. And, the problem I see with most people, they bought term, but they spent the rest.
They spent the rest. Okay.
They never saved it, because here's the problem. People have a greater need for finance in their life than they're ever going to have for a death benefit, because they're only going to use that death benefit once, and they're not going to get it.
Well, they're not going to give it. Somebody else gets it.
But they need it, and yourself. You needed money yesterday. You need money today, next week, next year, and down the road. So why don't you solve the problem for finance with a dividend-paying, high cash value life insurance? You're going to end up with more life insurance than the life insurance company would originally sell you, because it's going to grow. And when I talk to people, the last thing I talk to them about, if I talk to them 100% of the conversation, about 98% is about banking.
Well,
is about death benefit.
So what's the, because I've heard and these have just been in recent discussions about particularly whole life being a way to build generational wealth. And then now you're putting it in a perspective of a way to be your own business bank and help you with your cash flow over time. Can you talk about maybe the differences of how it can be used for both in those two scenarios?
Yeah, sure. And that's the point of this. You
Mm-hmm.
look at big people in this country. The Kennedys, the Bidens, and people like that. This is what they use. Mitt Romney, if you remember years ago when he was running for president, they were all over him about he was paying less taxes than his secretary. And the reason is because he has whole life insurance. So when he needs $2 million, he borrows it from his life insurance. He doesn't pay any penalties like if he had an IRA or a 401k. He has access to it. He pays it back. Let's say he takes it out to do some kind of business deal, and then he gets $3 million back. Well, he just repays the loan with the interest. The other thing people should understand, when you borrow, you're using somebody else's money. You're using the life insurance company's money, but they're charging you simple interest. When you use a credit card or you use a bank, they're charging you compound interest.
Wow. Mm-hmm.
It's a big difference.
Yeah.
Also, your money is also earning interest while it's sitting there because you have never touched it.
Yeah.
How does the generational wealth work? We always talk about, normally people will buy a policy to protect their spouse and their family. But as you get older, usually they've eliminated their debt. Now they have extra money by using this. The thing is, they might have even bought for their children, but to buy for their grandchildren, a smaller policy, because they can only put so much money in. And usually what happens when the child gets to be 16 years old? You remember if you had kids 16, they want what? They want a car.
Yeah.
They have a life insurance policy. The grandparent is the owner. So he, in this case, is the banker. They're going to come to the grandparent. They're going to say, Grandpa, can I get a car for myself? What kind of car do you want? How much you need? Oh, you need $20,000? Well, you have money in your bank. We're going to make you a loan, but these are the terms. You're going to pay 4 years. This is how much you're going to pay. What are we doing? We're teaching them how to become their own banker. Let's say they go to college. Now they can use that money the same way for books, for education. Then when they graduate, wouldn't it be nice, rather than giving them a nice party and $1,000 check, you can sign that life insurance policy over, because I might be in my 80s then. You can sign that policy over to your grandchild. They get all the money tax-free. They get the death benefit tax-free. But the most important thing is you've taught them how to become their own banker.
Yeah.
They'll never have to go to a bank for an auto loan, hopefully for even a mortgage. When you buy a house, you know this. If you own a home, when you buy a house, you buy two houses, one that you live in and one for the bank. Because if you take out a $300,000 mortgage and you have a 4% mortgage rate, people think that's what they're paying. A 4% mortgage rate over 30 years, you're actually paying the bank 71.9% interest. So you're going to give them like $215,000 in interest. Just imagine if you could keep that for yourself.
Yeah. Wow. That's pretty powerful, Bill. So how do you help how do you coach your customers through this process? Because I know you've been doing this for some time, and it's so interesting hearing, because I've heard you speak on this before, and just hearing it again, it's just a different, fresh set of ears and perspective. And maybe it's because I'm in a different place in life. I don't know, but I comprehend it a little better this time.
Well, I'll tell you, it's probably not you, it's probably me. Because as the years have gone by, I've educated myself, and I'm so different than what I did when we first met at the Urban League. In those days, I was talking about debt, eliminating debt. But infinite banking, I use this example with everyone. Infinite banking is if I had an apple in my hand, that's infinite banking. if I want to show you how to eliminate debt, taking one bite out of the apple, that's just a small part of what infinite banking can do, is eliminate debt. But you can buy a business. And I mean, I deal with a lot of real estate on this. We talked a little bit before about rates of return. I have a real estate investor who he lives down here, but he's got properties in Orlando. And we were talking the other day, and I said, I won't mention his name, but I said, let's say you go up to Orlando, you're just going to check on your properties. You're not really intending to buy anything. But one of the realtors sees you and says, hey, I got a property. I want to, I'm just looking at, no, I got to show you this property. You can buy it for $80,000. It's worth $150,000. The guy's just got to get rid of it. It needs work. So I said, let's say you go over there, you look at the property and you say, wow, it is. I mean, I can buy this property for $80,000. I can sell it next week because I know who I'm going to sell it to Ann Marie. She's a rehabber up there. I'm going to spend $80,000. I'm going to sell it to you for $100,000. So you rehab it, and you now own a $150,000 property that you're going to rent out. I just made $20,000. How did I make it? I accessed my cash value through the insurance company. I bought the property for $80,000. I made $20,000 in a week. What is that return? That return is never going to show inside the illustration. That is called an external rate of return. You made that money simply because you had access to cash. Have you ever been at a Thanksgiving Day, dinner at the house, and usually one of the relatives say, Ann Marie, my neighbor was selling a boat. He's got this Chris Craft. It's worth $100,000. He asked me, hey, he's getting divorced. Anyone, I want to sell this. I need 50 grand. I could have made 25 grand. I could have sold it to my friend for 100 because that's what it's worth. And you ask him, did you do it? No. Why? No access to capital. But if you knew that you had access, if you have access to capital, opportunities are going to find you. And not everything that finds you is an opportunity. You have to weed out certain things, but you will get better opportunities because people know you have cash. I ask people, let me ask you this question. You can only make one choice. What would you choose? Would you choose a death benefit or a pool of cash? Everyone tells me they'd rather have the cash. I show them how they can have both.
Wow.
I spoke to a gentleman. He's paying $13,000 a year for a $3 million life insurance term. And I asked him, why do you have, I was expecting him to tell me he has all this stuff. He couldn't give me a good answer why he had it. All he said is, I have a family. And he was young, 35 years old. So I asked him the question, how long is the term policy for? He told me 30 years. I said, let me ask you a question. 30 years from now, when you're 65 years old, 2 months before this policy expires, are you hoping that you die so that your family gets the $3 million? And he laughed at me and he said, of course not. I said, well, you're going to spend over the next 30 years. Well, I forget the exact number now. You're going to spend, I can't remember, $390,000. Something you hope you never use. Does that make any sense to you? And he just never thought of it that way.
Yeah.
Because we're told by term it's cheaper. But the problem is we have no access to capital. Life insurance should be used for what it is. It's for protecting your family, but you can use it for banking. Have you ever seen, we've all seen this, the FedEx trucks driving around your neighborhood? They probably come, in my neighborhood, they come 4 or 5 times a day. What are they doing? They're dropping things off.
Dropping things off, yeah.
If you ever look at their logo, what's on the logo between the E and the X?
Oh, it has an arrow.
Right. It's been there 35 years, but most people have never seen it.
No. I mean, I know because I'm in marketing, so.
But when you say that to people, they don't know. I didn't know it was there. Now, every time I see a truck, that's all I see.
Yeah.
But the problem is the banking part of life insurance has been there for 200 years.
Yeah.
It took Nelson Nash to discover it through his own angst of having real estate and the market collapsing. And if you remember back in the early 80s, interest rates went up to 21%, and he had to make the payments, and he paid it with the cash value from his life insurance.
So on average, Bill, on average here, because we're talking about business owners. So of course the amounts to put away in this life insurance would be a little more than someone who's an individual. So on average, what do you when you're coaching your clients, how do you tell them to get started? Is it a $100,000 whole life policy, $1 million whole life policy? What even makes sense for an entrepreneur?
Okay, see, you are the typical person out there. No, you say what everyone says.
Yeah.
I don't sell death benefit. So people will say, well, what am I going to, I don't know. I work on their cash. For example, let's say I talk to a businessman, and he has expenses, but he says to me, you know what? I have $20,000 that I could put in a policy. Okay, so we get talking. Then I come up and I ask him, well, you have a business here. How much do you pay in taxes? Oh, I pay $100,000 a year in taxes. Well, where do you save that money? Where do you put that? Oh, I put it in some other bank. I said, well, why don't we do this? Why don't we set up, I'll call it a foundation of $20,000. But instead of you putting your $100,000 in taxes in somebody else's bank, this is your bank. We're going to take $100,000 and we're going to put it in the cash value side, which is called a PUA rider. Okay, so they're going to put $100,000 in. At the end of the year, they're going to take a loan against the policy, and they're going to pay the taxes off. Now we found cash flow that they're using inefficiently. So let's say they do that for 10 years. At the end of 10 years, they're going to have a loan against their policy of about $1.3 million, which would freak you out if you had a loan from a bank that way. But when you're the banker, nobody's ever going to come. As a matter of fact, you never have to pay it back, because one day you're going to die. And the death benefit on that policy is going to be several $1 million. So you could die. The loan will be paid off of a couple million. Your spouse is still going to get a couple million. But here's the key. Let's say that gentleman does that, and 20 or 30 years from now, he sells his business for $800,000 or $900,000 or $2 million. It doesn't matter. What's he going to do with $1.3 million of it? He's going to put it back and pay the loan off, because now he's going to have access to that money tax-free for the rest of his life. He's not only used it to finance his business, but he's also used it to build a tax-free retirement that he can use at a later time in life. And when he finally dies, whoever he leaves that death benefit to, his children or his grandchildren, they're going to get millions. So when I tell them that and they get it, then I say to them, well, if you're paying $100,000 in taxes, you're making almost $300,000 a year in income. Why don't we take the whole income? Because what are you doing with that money now? You're putting it in somebody else's bank. Let's put it in the policy. You're going to take out the money for your taxes. You're going to take out the money to live. The difference is the death benefit isn't going to be $3 million in 10 or 15 years. It's going to be 20 or 30 or 40 million. You're going to have a big loan, but if you sell that business for $5 or $6 million, you have a place to put it. I always ask business owners, especially real estate, if you sell a property and you got $1 million right now, where are you going to put it? I'm going to have to put it in the bank. Well, if you had $1 million loan against your property and you sold against your insurance policy and you got $800,000, where are you going to put it? Oh, I'm going to put it in the policy. Nobody explains it that way, because life insurance salesmen are trying to sell you a death benefit that you don't really want. You might have children or somebody you're trying to protect, which is fine. But what they do is they guilt, usually whoever's the breadwinner, they guilt them. Like, I would come to your house. Let's say it was you. Let's say you had a husband and you're the breadwinner. I'm going to be telling you, and you're not really interested. You're going to be looking. So I look at your spouse and I say, hey, look, if Ann Marie dies, how are you going to pay for this house? How are you going to send the kids to school? How are you going to do this? How are you going to do it? So now you get guilted into doing it. Wouldn't it be better if you saw the benefit, the financial benefit of it for your whole life, and you also got the legacy? It just makes sense. But unfortunately, life insurance companies and life insurance salesmen, it's not that they're trying to, they just don't, they haven't been trained this way. I came in the back door. I didn't come in the front door. I don't try to sell people a death benefit. I just spoke to a woman in Connecticut. She's a financial literacy teacher at her church in Connecticut. And we went through the whole thing. And I designed several hours. We spent hours with them over time. And we finally came down to two illustrations for her. I did one that I thought she should have, and I did one that she wanted. I showed her the difference, that the one she wanted, she's going to have more money the first 15 years. But starting the 16th year, she's going to have less money than this one. Most people will choose the one that I designed for them because they see the value. She just needs the money now. But she also said, I'm going to buy a couple more of these. And she wants me to train to do webinars at their church. Because I'm doing one next week on Zoom for people. I'm going to do them every two weeks.
Well, I was going to ask you about that because I know you have something coming up. You tagged me in it on LinkedIn.
Yes.
So I want to definitely, let's talk about what you have coming up and how someone can reach you if they're interested in you really coaching them through this process of them becoming their own banker.
Okay. I mean, if they come, let's say they decided to come to the webinar. I tell everyone right up front, you are not going to be sold anything. I mean, if you sign up, we'll put you on our CRM, and you'll get emails. It's educational, because I've learned the hard way that if I try to force somebody to do this, they end up, I call it bailing, and you end up in the insurance business. It's called the chargeback. Because they don't see the benefit. So I don't do that anymore. I have a couple of books I ask them to read. And if they don't read them, then they're not really interested. This book, which is Becoming Your Own Banker, written by Nelson Nash. This is a book that just don't read it once. I've read this book about 15 times. I also have a thumb drive that I keep in my car. I've listened to it about 200 times.
Wow.
Business owners, I ask them to read this book, The Case for IBC, which was written by Nelson Nash, two other gentlemen, Carlos Lara and Robert Murphy. These people are involved in the infinite banking .org business. They have practitioners, a couple hundred practitioners. We don't have enough practitioners around the country, but we're trying to educate people. So the question you asked is how could they come? If they come to it, they're not going to get sold anything. When I'm done at the end, I use this statement. Whoever sent you here, if it was another agent, reach out to them. They'll be able to answer your questions, or we'll get you the information. If it's somebody that just came, they can email us, text us, or call us. I will not sell them. I have told people they want to do this, and I tell them you're not ready. You just don't understand it. And, if I sell somebody this, they end up with buyer's remorse.
Right.
If they buy it on their own because they understand it, they will buy several policies from me because now they see the benefit. Here's a simple. If you have a car loan, let's say it's $300 a month. So you're spending $300 every month, and it's going to somebody else. Once you take a loan from the cash value of your life insurance company, you're going to start controlling the flow of money in your life. You're going to pay that auto loan off of $300. But if you ever had a mortgage, this happens. You get a mortgage, a couple months later, you get a letter from a bank, and it says, Ann Marie, don't send your money to Bank A anymore. Send it to Bank Z. What just happened? Bank Z bought your debt. You're doing the same thing. So when you pay off that auto loan, you purchase the auto loan. Now you control it. So where is the $300 going to go? Back in your bank. That same $300 is a $600 increase in your cash flow because it's no longer going out, it's coming in. How quick do you think your wealth is going to build? How quick do you think your income is going to build? How quick do you think your death benefit's going to build? Because it's all related. Your stress level goes away, and once the light bulb goes off, they go, you know, I need to get another one bigger than the first one, because the first time they really didn't understand it. Sometimes they're up to here in debt, and I need to show them, because here's what people do with debt. Almost everybody does it. They have a credit card. The minimum payment is $50. What do? They don't send $50. They send $250. They have another one, $75. They send $375. I added up. Sometimes they're overpaying their credit cards $1,200. Why? Trying to pay them down. But I say, you know why you never pay it off? Here's why. You got a $5,000 on a credit card. You've had it what seems like forever. It never goes away, because here's what happens. You pay the minimum $50. You add $500 to the minimum. You write the check, or you do it online. As soon as the $550 is out of your account, you go downstairs and there's water leaking in the garage or wherever your hot water heater is. Now you have hot water. So now you call Juan. He comes over and he says, Ann Marie, I could fix your hot water heater. It's going to cost you $450. So what happens? You don't have the $450 because you just sent it to the credit card company. So what do you use? This is called credit card cocaine. Everybody's on it. They want to get off. They don't know how. If they use their money more efficiently, they will. And that is probably the easiest way to get people out of debt. Just use their money more efficiently. Those debts will be eliminated. If they have credit card debt, unless it's serious, they'll eliminate that credit card debt in generally a year, maybe 18 months. If it's serious credit card debt, maybe 2 or 3 years. They'll end up. I just had a woman. She's been doing this with me for 6 years. She had 17 debts. She's down to 1.
Oh,
she
wow.
doesn't really understand how this works, but just this year in March, she paid off an equity line. Took a loan of $22,000, paid it off. 5 months later, she took another loan of almost $10,000, paid her car. And next year, she's going to pay her mortgage off. And she said, Bill, her and her husband said to me, Bill, next year we're going to have $40,000 almost. We don't know what to do with it.
That's a
good problem to have. I said, you got grandchildren. Show them how to become their own banker. They'll never have to go to a bank.
That's a great problem to have. Great problem to have.
And it's everything I do. What I like about it is totally guaranteed. If it doesn't work, if you call me if you called me 5 years from now, Ann Marie, and you said I don't have these numbers, I'm bringing a mirror. The reason it didn't happen is you didn't do what you were supposed to do. Right. And you're not always going to be able to do it, but that's okay. Yeah. I don't have money for 3 months. Well, then 6 months from now, boom, you get a windfall. When you take loans from the life insurance, you create a gap in that policy that you can put the money back in. So if you get an inheritance, or you sell a piece of property, or you get a big bonus, or something happens, now you have a place to put it. So if you have $1 million, let's say you have $1 million loan against your policy, well, your death benefit is now, it's allocated, that money is committed because it's collateralized. But if you pay $700,000, let's say you pay the loan back $700,000, guess what happens to your death benefit? It just increases $700,000 because you release that collateralization. You've got $700 now in your policy. I mean, it's just a better situation than I always tell people. The only place you should be kneeling is in church, not at the bank trying to get
Well, listen, Bill, I know you have so much more. You dropped a lot of knowledge and information here today. And we definitely don't want to give away the whole house. So I do see here that if people want to reach you, and I hope register for your upcoming event, that they can do so at creatingwealthfromlife.com. Is that correct?
Yeah, they can go there. They can go to my LinkedIn page. They'll find me if they type it in. And I have it every 2 weeks. They'll see it. We have it as recurring. So if they miss the first one, we have it right up until a little before Christmas, and then we'll bring it up again in January. So it's just an education. It'll give them a better idea. I do the same thing over and over. If they get the books, and because everyone asks me, what's this going to cost me?
Mm-hmm.
It's going to cost you $20 to buy this book and read it. If you do it and you buy this book and read it, it'll change your life. If you don't, I probably can't help you.
Are those books available on Audible as well?
They are. No, they're not. I mean, if somebody emails me, in my email signature is a link to the store. They can buy it right from the Infinite Banking.
Okay.
Whereas if I ever came up, like I did when we were able to do live talks, I usually bring them with me, because online they're like $25 or so. But
yeah.
I just sell them. It's easier to get somebody to buy a 20, because if they buy I could give it to them, but usually if I give the book to people, they don't read it.
Yeah.
They have a stake in their future. Usually they'll read it. If they read it, what happens is, not that they're dumb questions, they just ask better questions.
Right.
Now they ask questions specifically pertaining to them.
Yeah. Well, definitely want everyone to read the book. Get your copy, as well as make sure you follow Bill on LinkedIn so that you can see his upcoming events. Bill, keep doing the great work in the community, educating folks. I'm definitely about economic development, wealth development. And so I appreciate the knowledge that you have shared here today. And I hope those that are listening and will listen, and those who are listening will share this video, so that way they can inform someone else about this. Like I said to you before, we talk about, like you said, term life. There are talks about using insurance to build wealth, but there's rarely talks about how to use it as your own bank. So thank you for delivering that piece of information here. And just a few, community news, of course. I'll do some shameless plugs because it's my show, right? So if you all missed, and thank you for everyone who congratulated me and was rooting for and supporting the new book, No Glory Without a Story, which is a collective of 15 entrepreneurs where we share our journey through our successes, our trials, our triumphs, and we share different tips on how you can succeed as an entrepreneur. And so you can get an autographed copy of my book at AnnMarieSorrell.com, or you can get a regular copy at Amazon. But if you would like a autographed copy, please go to AnnMarieSorrell.com and purchase your copy of No Glory Without a Story. Of course, you can also find my first book, Chronicles of a Serial Dater, there as well, for those who are interested in dating and relationship tips. And just want a real funny, good read that you might be able to relate to, and that's for men and women as well. And of course, there are so many things happening in the community. I just want to throw some save the dates out there for anyone that's in or around Hallandale Beach, or just in South Florida, and you're going to be looking for some really good eats, as well as some good deals. Hallandale Eats, which is going to be a 2-week initiative promoting all of the amazing and diverse and multicultural restaurants in Hallandale Beach. It's going to be October 29th through November 14th. You do not want to miss that. You can go to the Hallandale Beach CRA website to check that information out. Of course, like I said, there'll be tons of restaurants participating, tons of deals that you can take advantage of. And that's October 29th through 14th. You'll definitely see more information to come on that. If you're not familiar with Cannabisiac and you're interested in expanding or launching, or just curious about the cannabis industry and how you can either start grow or even expand your current services and products into the cannabis industry, make sure you check out cannabiziac.com. We have amazing events coming up this month. One of them being, this power just went out of here. Energy saving. Hey, one of them being our Cannabis Cafe, where we talk about hot topics in the industry and what's got you buzzing. That's going to be October 4th. And then following that event, we have our Hemp Happy Hour, where we're connecting with those who are doing business in the hemp sector all over the country and the world, as well as our Cannabiziac University, where we'll have Dick Clark, who will be doing part 2 on the art of networking. So much that you do not want to miss. And of course, we have enrollment for our next cohort for our business incubator program, which is happening now, but our next class will start in March. So you can start registering and signing up for the next class now. So those are the things that are going on with Cannabiziac. And I'm wondering, have I missed anything else? Of course, go to my website, AnnMarieSorrell.com, for the books that we've talked about. If you're, of course, I'm elected official, so Palm Beach Soil and Water Conservation District, if you have been following, we do not have a meeting for October, but we will resume our meetings in November. So please check out the meeting schedule, which is on the Palm Beach Soil and Water Conservation District website. And I will be having my conversations. Why can't I? Conservation Conversations show coming up on October 15th. So make sure you stay tuned and look out for that, as I will have an amazing guest on that show, as well as we talk about our environment. Last month, we had a great guest that actually talked about investing. Bill, you would love this. It was investing in sustainable investing. And that is, investing your dollars in companies that actually practice sustainability and that are really good people and contributors to our environment. So you can check that episode out that we just had a couple weeks ago on Conservation Conversations as well. So I hope I covered everything. Of course, I don't want to hold up your entire afternoon. It is almost 1 o'clock. Bill, thank you so much again for being a guest today and just imparting the knowledge, as you always have since the day I met you. You've always just been a wealth of information and just really trying to help people and change their financial future. So thank you for all that you do in our community in helping people change their financial future.
Thank you for inviting me. And God bless you.
Thank you. So make sure you all tune in for the next episode of Tea with Ann Marie. Oh, Bill, I got to ask you, what's your favorite tea?
You're asking the wrong guy. I'm like an Englishman. I just get regular black tea and boom. And I drink it with a lot of milk.
Well, there's nothing wrong with that. That is definitely the Englishman way.
I mean, I'll drink sometime. My dad used to drink like 6 cups a day.
Mm-hmm.
And then he read somewhere, and this was way back when I was a kid. I guess he read that it's not good for you because of the caffeine. But he had tremendous willpower. He never had another cup the rest of his life.
Wow.
He drank. I'll tell you what he drank, which was terrible. Remember the Sanka? The Sanka? Oh, it tasted like rust.
Oh, okay.
Most people like me will remember. You're too young. But they poured it in. It was like the first instant coffee. Oh, terrible. But my dad had tremendous willpower. And the thing that he always told me is, don't worry if people like you. Make sure they respect you.
Absolutely.
Respected him.
Well, your dad was a wise man. Well, I'm actually having, it's because I'm mobile today, but this is sour sap. I don't know if you've heard of it.
No.
So sour sap is a fruit. It grows primarily in the Caribbean, but of course it's here in different exotic stores like Food Town and different places like that. But it has a lot of benefits, especially for preventing cancer, as well as treating, as well as many other, and the tea comes in the leaf, so you can get the tea leaves, but you can also eat and drink the fruit and juice the fruit as well and get all of the great benefits. So I try to feature a different type of herbal tea because I'm a tea girl, not a coffee girl. So anyone interested in the benefits of sour sap, and you can look it up, SOUR, like sour, and then sap, SAP. Of course, there's another native name for it that I can't pronounce and look up right now. But you can look that up and you can see all the great benefits of the sour sap fruit, as well as the leaves that you can use as herbal tea. So I just wanted to leave that with you. Any closing, like, final thoughts that you want to leave, or do you have a favorite phrase that you like to leave with participants? I know you just quoted one from your dad.
Well, the only thing I would say, and you would just bring it up, is, people make investments. And some people, they'll invest in real estate, then they can't invest in the stock market. They invest in the stock market, they can't invest in real estate. It's usually either or. If they set up their own bank, this is an either and. You put it in, and you can also buy real estate. You can also invest in the stock market. You can also invest in your business. So it's an either or. That's probably the best thing that people could understand. The only thing is, take back control of your finances. Become your own banker, and it will you'll control the cash flow in your life, and everything will become a lot better for you.
Absolutely. Well, thank you for that, Bill. And I hope everyone who is listening, again, make sure you share this information. Do your research and look up Bill, attend his events, and learn more about how you can invest in your future and improve your cash flow and improve your generation, your family, your multi-family generations of financials and wealth. With that being said, thank you all. And as my favorite things that I like to say to everyone, live out loud, laugh a lot, and love unconditionally. Thank you for tuning in to Tea with Ann Marie, where we are spilling the tea on business, politics, and community news and more. See you all next time.
All right, dear.